Welcome to this week's market drama. We'll begin with the S&P 500, which was down 1.5%. It is now down 14% from its February 19 closing high. NASDAQ was down 2.6% for the week. So what led to the sell-off, especially after the strong performance the prior week? Well, new export restrictions on semiconductors to China put pressure on large U.S. Semi companies like NVIDIA. In addition, Fed Chairman Powell reiterated that the Fed is likely to remain patient on rate cuts, given that tariffs potential weigh on both inflation and economic growth. Another way of basically saying this is that the Fed's mandate is both full employment and keeping inflation under lid. Tariffs are inflationary, so this puts them in a tough spot where they're expecting now inflation to go up, which doesn't really then make sense for them to lower interest rates unless the economy's hard numbers, right, employment start to suffer. Then it gives them kind of justification of saying, hey, look, sure, inflation is going up a little bit, but we have a dual mandate with employment. Employment data is starting to roll over, but is still very strong in relative terms. So that's why the Fed chairman's kind of pointing out that they're going to have to kind of be patient here. If they get over the hump of inflation, kind of having that one up increase because of tariffs, and it starts to roll over, then maybe in the second half of this year, they could start lowering interest rates. Anyway, those two things, right? The Fed chairman's saying they're going to have to be patient, and then the new export restrictions definitely drove the market action this past week. Next week we have PMIs, so we'll look to see what we find there when it comes to call it leading indicators of how the economy is doing here in the United States and globally. That is it for this week. Stay tuned for next week.